I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the last week in the markets and a look forward at what might happen in the next week. We're going to take a look at an unusual chart that shows us the events that may have influenced the markets in this week that has marched steadily to the upside in the stock market. We'll take a look at the calendar of events in the coming week as we get now into earnings season and a lot of stocks that I follow getting ready to report. We'll take a look at what these trends have been in the market, these long downtrends in a lot of groups, and see these big upticks that have happened in a lot of these oversold groups as value investors move in, and a look at whether these trends really have begun to move on the upside or they're still in downtrend. So we're going to take a look at that later on as we look at our trending segment. Of course, we'll answer your emails going forward, some great ones, and we'll take a look at our short-term view of the next week in 5 different markets that I'm involved in actively. Last week, like I said, a stair-step upward move that just seemed to not want to stop. It's 2 weeks of big gains that we've had. S&P 500, how's this? Up 128 points in just 8 days. Is that unusual? Is that monumental? And does that mean a new bull market? Well, you got to go back and look at my big picture analysis of the stock market in the member section. So if you're not a member, it's time to become one. Great stuff that you're going to see in there. And it talks about this big rally and whether or not this means that the market's had a big upturn and into a new bull or not. So make sure you go watch big picture analysis on the stock market. Talk about it being a big week. A big week for stocks and a big week for the Chicago Cubs, right? As their playoffs starts tonight, get into the playoffs with a big 4-0 win. And I'm going to celebrate that since I have the opportunity here in Chicago to say, yay Cubs, let's go. And we'll be watching that game tonight. So as far as the stock market goes, this week each selling wave seemed to be bring in more buying as we saw higher and higher prices. Some big dips during the week, but then all of a sudden buyers would come right back in. A lot of what was going on was the oil price, which we expected to have a rally over $50, and it got there today. And that has been a factor in lifting the market, of course, as a lot of those oil stocks are weighted in the indexes. So as oil ticks up, the oil stocks tick up, the indexes tick up, and it's got a lot of support from that and a lot of these beaten up groups. So we're going to talk a lot later on in the show about these rises and all of these beaten up groups as they have started to rebound. Let's take a look at our 60-minute chart that we look at every single week, which is going to tell you, all of the little moves, all the stuff that moves stuff in the 24-hour trading period as we see markets trading around the world, of course, and moving on a regular basis overnight. A lot of people don't trade overnight, but the markets do move, and you'll see that in here. So let's take a look here as we look at a 60-minute chart of the S&P 500, the ES, over a 24-hour period. So the gray areas are the overnight trading, and the white areas, those little white areas, are the pit traded or day trading times. So you can see that overnight, lots still does happen. On Monday, the markets rallied steadily overnight, and we had a big gap on the upside, and you could see it continued Monday to have a big move on the upside. It was a wild reversal Friday, and the last 2 Fridays in a row, I've done the show before the market closed. This time I waited a little bit longer, but I'll probably still wrap this thing up before the market completely has closed. But I'm trying to get closer to the end of the day because of these crazy Fridays. Big upside reversal last Friday and follow through early on the upside as world markets did move to the upside. Eurozone, they give more sign of slow growth. They estimated only 0.4 for Q3, and that was enough to say more stimulus comes in and the markets got firm and followed through here in the United States. The best one in Europe was the CAC 40. That's the French CAC 40, up 1.7%. And as far as stocks goes, well, the steels started to lead this market up. They really started to get a good rally. ATI gets an upgrade, up 7% on the day, and big bounces in these beaten up industrials, metals, and oils leads this big move up in the stock market on Monday. Tuesday comes in, and there's some selling overnight. We get a little dip in there overnight, but then it rallies back on the close near the end of the pre-market time, and world markets were just a little bit higher. U.S. indexes, well, they were super choppy all day long. Big opening right there that you could see on Tuesday. They sell off hard and then come back at the end of the day. We've had a lot of that going on as you look at the end of the days right in here where buying seems to come in. This is very typical of a market that wants to go up, and there's a lot of buying going on. Goldman, they say the rate increase might not come until 2016 or later. On Friday, there's some dispute on that because, the Fed heads start to speak. DuPont is up 10% on the day, and we'll look at that chart in a little bit, as they guided down, but their CEO retired, which apparently brought an applause from investors. F5 down 3%. Citi says sell that one. Tesla's down 3% on Tuesdays. Analyst comments are negative on that one, that the Model X, cool car, but price way too high. They must have been listening to me because I've been saying that for weeks. Gold, it's up and it lifts the miners. Oil strong and it lifts the energy stocks. And that really is what kept the stock market from correcting as it got this rally in here. Comes Wednesday, and markets overnight rally strongly. You could see that there. The DAX is the strongest, leads the markets in Europe, up 1.2%. Oil strong again, gets near 50, which was our target for the week. Huge moves up in the energies, materials, miners, big gains that you could see in there. And that leads the U.S. stock market up another day where it opens higher, sells off in the middle of the day, and then rallies on the close. You could see that right in here on Tuesday also. So the S&P 500 up 21 points in the first hour and then fades, but then ends strong. Sun Edison up 10% as they say they're going to cut costs. Rio Tinto, the materials stock, up 8% on an upgrade. Yum Brands on the downside, big earnings miss, 15% there or more on problems in China still. Adobe lower on guidance. We're going to talk about these stocks in just a little bit also. And there goes Tesla as more negative comments come out, 4% on the downside again on Wednesday. Comes Thursday, and you could see overnight what happened was, they sold them early, but then came back again. Seems like that happens both overnight and in the regular traded session. It actually happened here on Tuesday. It actually happened here on Wednesday also, where a lot of buying just keeps coming in this market on these dips. So come Thursday, China up 3%, but the rest of the world isn't doing a whole lot. S&P 500 had gained 128 points in like 6 days. An amazing rally that you see there. FOMC minutes come out. You could see the moment that they came out there and what happened in the stock market. They said they're going to hold off on a rate hike most likely. They cite global risk, and our central bank has now become the central bank to the world, apparently. And they're going to look at everything out there and do anything to keep the interest rates from going up, because heaven forbid they should change their policy and it'll be looked back at this giant failure that it actually is. Stocks rally again up on that news, as they seem apparently always do when the Fed says something. Big rally on the close, and the stocks end sharply higher. EMC is up that day as Dell talks about being in merger with them. VMW, which there was talk they might be in merger, falls 6%. GoPro down 5% on a big price cut. I want to buy one of those now that prices are falling. Love their cameras. eBay down 6%. We'll show you that one in a little bit. Talk about that one. And Netflix down early, and it looked like it was getting hammered hammered that day on Thursday. But then they talk about a $1 price increase for new subscribers. That's new subscribers. And the stock literally explodes to the upside, flying on that day on that news. I remember a time when they raised prices and it turned out a big failure and the stock collapsed. Come Friday, well, that's where we are right now. A choppy session overnight, as you can see, and another overnight session that closed strong after being down. And then the U.S. stock market, well, it starts to ease back. Now, of course, here we are with a couple hours left to go in the day, and this we'll have to see if it can put on a strong close or not. Worldwide stocks, they're up only 1% as they follow the U.S. on the upside. Oil up again. This is the biggest week for oil in 5 years. How do you like that? Monstrous move there in oil as it trades significantly higher, gets well over the $50 number, but now has backed off again closer to 49. Goldman, well, they must have known something. They said the oil rally was not going to last. As far as the Fed heads go, they're out talking. Fed Lockhart says he still sees a 2015 rate hike. That must obviously be, I think, in December. Fed Dudley comes out and he points to a December rate hike, simply saying things that sound like no way it's coming in October either. UAL, big up move in United Airlines to the upside as they talk about the outlook and margins being better. American Airlines, big traffic gains there. So we have airlines moving up in spite of the fact that we had this big rally in oil. And I think that we're probably going to see a time period here where airlines actually do better. Airlines all strong despite that oil rise. And Gap stores down 8% as sales are really, really weak. And stock comes back from that 8% to be only down about 5% as they cut guidance. And that is one ugly chart, which we're going to show you in just a little bit. So that is our chart of the S&P 500 on a 60-minute basis, looking back at the whole week. And you can see lots of stuff went on. And yep, all that's about market awareness, knowing what drives the markets, and just trying to listen to that so we could see what is going to go on going forward. Market this week just chopped its way up as we've seen one great week to the upside. So what's going to go on next week? Well, we're going to go to our earnings calendar, earnings and economic news calendar to see there, and we'll flip that up for you right now. And a lot of people ask me, they love this calendar and they want me to post it somewhere, and it would be nice if I could do that. Trying to figure out how to do that, and I hope somebody answers that phone on my team pretty soon, because that phone is supposed to be out of here. And the truth is that we the best way right now is just to take a screenshot of this, and we'll try later on to figure out if there's a way that we could do this and there's something to copy from. Thanks for answering that phone. So let's take a look at this economic calendar, and here you go. So earnings season, well, it's coming right now, and you can see as these time slots start to get filled up, as we have pre-opening, post or close earnings reports, and the economic news on this calendar for this coming week. The floodgates are going to open in about a week, where this chart is going to be absolutely jammed up. Now, we only report the earnings on the stuff that we follow on when they're going to report it. And so that means, we have about 330 stocks on our list that we look at. And, there's, some 6,000 stocks out there that are somewhat followed, and we don't do that. I mean, we just look at the stuff that we consider to be tradable. So anybody ever has a question on a stock that's not on our list, you can just send me an email, and I'll see if I can help you on that. But this is what we're going to look at right here. Earnings, none on Monday, and no economic events on Monday, as it actually is semi-holiday. And then Tuesday comes, and we have Fastenal, Johnson & Johnson pre-opening, and Adtran, CSX, Intel, JP Morgan, and Linear Technology coming on Tuesday after the close. Wednesday, we start to get the floodgates of financial releases. Bank of America, PNC, and Wells Fargo Bank on the pre-opening, and after the close, Netflix and Xilinx. Thursday before the opening, we have Citibank, Cyprus, FCS, Goldman Sachs, KeyBank, and Philip Morris, Schwab, Taiwan Semiconductor, TSM, United Healthcare, and U.S. Bancorp. After the close, a big one in there is Google, along with AMD and Slob. Friday, GE, Honeywell, and STI. Pre-opening. As far as economic events go, most of these are not big market-moving news that is coming out. I can't see anything on here that could move the market in a big way this week. And maybe the biggest event here is going to be the Beige Book, and usually that doesn't move the market a whole lot. So not a lot here that I would say is a market mover on this calendar. Hope you enjoy that calendar, and man, it is going to be jam-packed in the next couple of weeks as the earnings really start to come out. That is the opening segment for the show. Hope you enjoyed that, and we're going to be back in just a moment with the best of the week. For the best of the week, well, this was a week of relentless buying. Seemingly the market barely was able to hold any kind of a downtick, and what we saw was the beaten up groups, stocks that barely were able to rally for seems like months, they really started to pop. We saw that in the industrials, materials, oils. That was really the groups that had the very, very best upside moves. A few upside moves on some news, but basically it was rebounds as value investors just came in and said, okay, at some point this economy is probably going to get better and these prices look really cheap. So they came in and pushed a lot of prices up in a big way. But there were a few news items that got stuff moving on the upside. One of them was DuPont, as their CEO retired. Take a look at this chart. This is the weekly chart we're going to put up with our cycle analysis, and you'll see that DuPont did get a big upside move, and that really was what we were expecting, well, maybe a couple of weeks earlier, because this move was a little bit late for us. You can see this is where we expected the low. That small little cycle is what brought the low, and look at this pop. As what a vote for the need for a new CEO there, as that stock gets that giant pop on the upside. You can see that truly is the beginning of a new upside cycle. One of the great things about cycle analysis is that it's very visual, and when you see a big move up like that early in the upside in the rising phase, well, you know that pullbacks are going to be buying opportunities in a stock like that. Take a look at the daily chart. You'll see in here, and you could see that pop got it up into this 89-day moving average. This is usually a place where you would expect it to pull back a little bit. See, this cycle bracket slipped a little bit over, so let's put it in line where it belongs. And you'll see here, probably going to get some few days of pullback in here. But then I think that DuPont is probably a buy. Now, you have a lot of stocks in these beaten up groups that moved up, and I'm just going to handpick a couple of them to show you what the best really in each group was. One that is not widely followed and not really widely followed by me, but it's in my group, and I do look at it often, and that is Whiting Petroleum. This was one of the best percentage movers on the upside. That symbol is WLL, Whiting. We'll take a look at that one right in here, and this one had just this major pop on the upside, and this is another one as it moves up from this week, just from about just under 16 all the way up to a high of in the 21s. This was just a spectacular move on the upside. But we got to put this in the category of about the best percentage gain in oils. Here's that 89-day moving average. It proves to be some resistance right in here. We have the slim ribbons turning up, and We'll talk a little bit more about slim ribbons a little bit later on. And this is, a good sign when you see that. So we're going to look for some pullback in here also. This is the breakout level right over here, and you could see the slim ribbon coming across. So it looks like just under 20 is going to be the area to expect a pullback in there, and that's probably going to be a buying opportunity. Take a look at Joy, J-O-Y, in the industrial category. Deer and cat also had big pops. Last week we talked about the fact that there was a buy signal in here, an engulfing pattern in Joy, and then the stock pops huge on the upside. This week moving up from just under 15 to a high of just under 20. So you could see these 30% moves are just not unusual when you get these stocks really depressed. Deer, cat, good moves all on their own. Take a look at a material stock. And most of these material stocks got some great pops also. And here is FCX. This is an oil and gold. And this stock gets this big pop, inverted head and shoulders that you can see in there that formed. That's left shoulder right in here, kind of a small one, and your head, and then your right shoulder, and then it breaks out above this level right here, and it gets up to that 89-day moving average, and that's the place also we'll look for a pullback. So just under the, let's look for around 12 bucks in there as the pullback number, and the number where, well, you could probably do some buying in there. Last week we did mention two stocks in the last, I can't remember, last week or the last couple weeks, that we thought were ready to pop on the upside. One of them was Louisiana Pacific, LPX. Man, look at this right in here. The stock in the last 6-7 days pops from 14 all the way up to over 17. So really a huge move in there. What tipped us off to that was the fact that it was getting down to a cycle low period. See that little spike there, that blue spike? That's the timing where our low was expected. Amazing how that worked. And you can see the cycle patterns in here. Down cycle and up cycle meets the perfect timing. The rally, the low that's way too early, that says to us this will fail, and all the way back down to that price over there. So it was perfect. Got into this rising zone, another stock that you can buy on dips. Seagate was one we said, well, Western Digital had a big up move the week before, and we thought that Seagate was going to join it on the upside, and sure enough, it sure did. Look at this week that it had. Cycle low due right on time, moves up strongly, morning star pattern formed in there in this rising cycle. This was a beautiful one to catch, and I admit I was long it and got out of it just a couple days too soon. Well, I wanted to get some money in the bank. So here we are as it approached the 89-day moving average. I was motivated there as we see that, well, it had a hard time as it approached it in these 3 times right here. So those are, this is early in this rise right here. I expect some kind of a pullback, but overall I think this is going to be okay too. So a lot of the stocks that had these big upside moves, they are really early, and they're looking to me like there's buying opportunities coming in them. Now, a couple other stocks that I want to mention in the best of the week. One of them is McDonald's, MCD, as this stock got a really extraordinary move on the upside based on breakfast all served all day, and that's a limited breakfast. I gotta think that this move is crazy. Now the low came a little bit early for us on that flash crash, and then it got into this rise, but this is really excessive on a stock like this as it makes this big spike up. We're going to look for a pullback here in McDonald's as breakfast all day just doesn't do it for me. So you could see this rising wedge that it had in here that it broke out of on the upside, and now today is the day that it's giving this little stalling pattern. We're going to look for a move pullback in here down to about 99 to 100 in this stock as just a little short-term downside swing in McDonald's. Would not chase that one at all. Two other stocks we're going to talk about in here. First one is Juniper, JNPR. This is two stocks in the tech category that had just huge moves. Look at this Juniper move as it rallies from about $26 a week ago up to over $30 right there. When you look at these cyclical patterns in here, this was like right on time, and we really believed it was going to go to a new high. Where do we get that from? Well, simply you could see this cycle rhythm right in here. See that perfect cycle? Right-hand translation, it only leaves a little time to come down. Rally all the way up, right-hand translation, a little time to come down. New rising phase takes you to a new high. Beautiful cyclical action in there. Great pattern and a great move for the week. Another one that I think if you get a pullback in there, it's going to give you a buying opportunity. One other stock in the tech category that had a big upside move is Micron. Had a question about that in emails and tweets, so we'll look at that one a little bit later in the show, as that one has a big gain also for the week. So right now we've had this week where it's in just a monstrous advance. In fact, the S&P 500 moving from its low to its peak this week on Friday, some 120 points or more off of that bottom, and just a spectacular straight line move. So to pick out stocks that I'm looking for as buy candidates for the week, well, I'm going to have to get some pullbacks in here in order to even have any entries at all. So what I'm looking for is stocks that I think, well, can pull back other than the ones I just mentioned that had nice moves in early patterns, and then get them in kind of their buy areas, and then make some long side plays in there. A few stocks I'll mention about that. Gilead, GILD, I expect that one to get to like 97, 98. Dillard's, DDS, around 91, 91.50 is kind of the area for me. Walgreens, WBA, that's around 82.5, 83.5. That's my buy zone in there. And a couple stocks that are in the category of that are in the worst of the week, I'll mention in a moment, are ready to bottom. So I'm kind of putting them as a favorable mention as stocks to look for potential bottoms and upticks this week, as Dollar Tree and eBay both had bad weeks, but they're down to cycle lows and points where they should get some good-sized bounces. So those are some depressed stocks. Depressed stocks are getting buyers coming in, right, that I'm looking for to get some pretty good bounces. So that is the best of the week. Well, this week was the back end of 1,100 point advance in the Dow Jones Industrial Average in 2 weeks. Amazing. And, well, we've seen some stocks, even in that environment, get hit on the downside. We're going to talk about 6 of them here, and then we'll talk about some stocks that maybe are set up for some pullbacks, downside movements for this coming week. So the first one we're going to look at in here is F5, FFIV. This stock, Citigroup, said sell, and what it left was an abandoned baby right at the 89-day moving average. This you could see, I'm going to leave the weekly and daily up for you to see right here. This is still kind of heading down, so we're going to look for a little bit more downside move here in F5. And look at this unusual single bar right over there, which had an upside gap there and a downside gap here. That's known as an abandoned baby, right at that 89-day moving average. So we're going to look to see the stock keeps getting some downside swings in here. Wouldn't be surprised to see it trade back down to 110, 112 one time. And this, to me, is going to be the opportunity maybe to buy the stock, but I really wouldn't until then because of this pattern. So F5 gets that hit. Another one that got a big hit on the downside is Yum Brands. Well, that was on their earnings, and there was this big move to the downside. So I'm going to look at the weekly first so you can see how this is looking in here. We were expecting a further decline, and that was based on this pattern right in here, and two a smaller similar cyclical pattern coming in there also. There it came, that big decline on earnings. But now we're getting into this period where it could turn on the upside. So, I mean, what would be the indications that that might happen? Take a look over here. Even though we're doing the worst of the week, this is in that category of, well, maybe it was the worst, but maybe the worst is over. Take a look here at this pattern and you will see a couple things. First of all, you can see this huge volume on the bottom in here that happened. That meant, well, investors puked, and they simply sold the stock. They didn't care what price. And then you get this morning star that's formed in here that we have highlighted. So this to me looks like an exhaustion gap right there. And that then says to me that this is probably a buy area here between 66 and 69 on the stock, and this looks like it's quite overdone on the downside in here. And this huge volume says it's possible that that was the worst of it that we're going to see for a while. I don't buy big downside gap stocks. I mean, I think that the odds are bad on those kind of trades. But I want to point out when I think that something is setting up that it's likely that the worst has been seen on it. I think that's the case. Adobe, they cut their outlook, ADBE, and that stock moves to the downside pretty significantly. And this pattern to me looks like a problem. As it got up to its last high, making what is pretty close to a double top, a possibility, and you could see that cyclical pattern now suggestive of the fact that it may be rolling over. So we're going to look for this rising phase to be ending, and you could see these double hanging men right there. That's one there and one right there, which is suggestive of a stalling on the upside in the stock. Now you can see that 34-week moving average tends to be a target and support. So before I leave, let me just say that that looks like about $79 on there, or a little bit lower if it gets through it. See, is a reasonable expectation on the downside in this stock, about $4 down. And when you look here on the daily chart, well, this is an ugly pattern. This is an island reversal. These two bars up here gap up and then gap down. This rising market is getting this to come back on the upside, but this looks to me like it's setting up for more downside. So we're going to look for it to get somewhere into that area of congestion right down over here in this next move on the downside, and it wouldn't surprise me to see that happen quite quickly. So Adobe is one that is in the category of the worst of the week when you look at the chart pattern. Gap Stores GPS, this one, I mean, it doesn't hardly get any worse. This one has been even hard to read on the cyclical patterns because it's all of this big down move in here is so smooth and the bounces are so small that it's hard for us to even identify where these cycles are. We do the best we can with what we have in here. This one actually looks like it has a potential for another month or so on the downside. So Gap Stores, they come out and guide lower on margins and sales, and that stock gets hit again. Look at how this thing would just fall apart in this teen outfitter category. It had that little bear flag that formed in here and then moved to the downside on this gap. So not a great looking pattern when you look at the slim ribbon, which again I'll talk more about later in the show. You could see that, well, it turned into negative momentum right there. There's that red arrow, and since then at $37, well, all the way down right in here. So really a great indicator for momentum, and this one looking, well, really, really bad. A couple stocks that I mentioned in the best of the week that look to me like they're ready for bounces that really belong in the worst of the week category for the week are eBay and Dollar Tree. They had bad weeks. eBay, another one that was affected by a report of weaker sales, and so that stock got hit, but it's at a point where I'm looking for it to turn around on the upside as the same thing on Dollar Tree. Some stocks that I'm looking for pullbacks, FCX will it came right up to a resistance area, and I think that's due for a pullback. And of course, that was listed in our best of the week. Nike, that has a pattern called three black crows. Now, it's had a bounce the last couple days, but those three black crows are looking downward and often are precursor to more on the downside. I shorted Nike today. CRM, Salesforce, that one is set up for some pullback. Costco, we're going to look at that in emails and tweets. That one I'm short and so far wrong, as it gets up to a big resistance area at a place that I would expect it to roll over from. And Adobe, ADBE, which we mentioned before, which cut its outlook. That one has that island reversal, and I think that one's got more downside. So those are the 5 stocks that I think have got pretty good probabilities of having some downside action as the stock market is due to get a correction, and we're going to talk about that one in the short-term view coming up a little later. So that is the worst of the week. Trending. Well, that's really a matter of perspective. We've seen, long declines in a lot of different groups out there as we've had, world slowdown. China slowing down, Europe very slow, seemingly not able to get much out of a recession, like 0.4% growth. Japan, of course, struggling out there. And, well, the U.S., kind of the biggest grower that we have, growing at, well, let's say just over 2% a year. And not all that good either. And lots of stocks in the industrial and materials category have really had a rough time of it. And we saw oils, how much they came down also. So these long downtrends have gone on. There's that word, trend, right? So, what makes a downtrend, and how do you know when we got out of that downtrend and into a new uptrend? Again, it's a matter of perspective. I'm going to show you some charts here, and we'll see, whether or not we're out of this long decline that we've seen in many of these groups, or whether or not we're likely to be back in it before you know it on the downside. Let's take a look. We'll take a quick look here at about 6 stocks, and you will see here that as far as trends go, it's a matter of perspective. Take a look here at Freeport, FCX, that's a gold and copper stock, and this is a tool that probably many of you out there have not seen. This is the slim ribbon, and what the slim ribbon is made up of is 3 exponential moving averages, and it gives you little signals, and that is when you're in an uptrend, you get that little green arrow right there. That means that your momentum is on the upside, you're trending up. And it colors all of the bars green, as you can see that, as it continues to move on the upside. This is a 1-hour chart on Freeport. And you could see over here where it was in a downtrend, and then it got neutral for a few days as it neutralized that little blue arrow. When it becomes a negative momentum, it's a red arrow. And then has been in this uptrend for, this last at least about 6, 7, 8 days. Nice uptrend that you see in there based on the 1-hour charts. By the way, if you want to get this slim ribbon, all you have to do is go to askSlim.com, go to resources, and you can find the script for the TOS platform right there for the slim ribbon. So there's your uptrend, right? Is the downtrend then over? Let's take a little look at a different perspective for maybe investors and swing traders. And I'm going to flip this chart right now from 1 hour to 1 week. And there's that slim ribbon again. And wow, what does that look like? Well, we've had a bounce. Can you imagine that chart that we just saw is right here? That little rally right there is that 1 hour chart. And, here's where the slim ribbon turned into negative momentum right over here. You had that big decline from 34 to 16. Then it gave you a little neutral signal right in here and turned negative again, and there it went on the downside. we're actually quite a ways from giving any kind of a signal in here, a neutral signal. So this is certainly under suspicion as just another one of those bouncing periods. So we're going to look at a few different stocks in this same way, and you'll be able to see that maybe these trends are in suspicion that we have right now. Let's quickly take a look at a few more of these stocks. Next one we're going to look at in the materials is a BHP Billiton. That's maybe one of the biggest, if not the biggest, material stock in the world. Here is that trend that you see, the slim ribbon, as it has been moving up for some about 9 days that you can see that. Most of these trends are about 9 days long. Here's where it turned positive right over here, and this big move on the upside powered in my fire engine here. I hope they're not coming here, and I don't feel any heat from anything but light, no flames. So there's that big uptrend right there in BHP Billiton. And what does it look like on the weekly? Well, still in that downtrend. You see that little uptick there? That's the chart that we just looked at. Let's switch from BHP Billiton over into the steel stocks. Man, we've had a big rally in U.S. steel. Look at this rally as it rallies from just under 10 all the way up near 13, and slim ribbon turns positive there. And, well, there's your weekly. It hasn't even got back up to the slim ribbon right there. You've got what's known as a bullish morning star, but momentum still strongly on the downside. You see all these bars, how they're still red. See that little uptick right there? That's that chart that we just showed you on the daily. So let's switch over again. We'll take a look at Joy, because a lot of these industrials have really been ticking up in a big way. There is Joy, and there's been Joy as it moved up from 15 all the way up to almost $20 in this last 6 days in there. But of course, when you look at the weekly, it's just another sad situation. So in this case, when we look at what is trending, well, on the short term, we've got some uptrends going on in some of these industrials, and also in the oils. Let's switch over and look at a couple of oils in here. How about Chevron, CVX? Nice move we've had up here, and we called this. We thought oil was going to move on the upside and these stocks were going to move up nicely. There you go, 75 down there, 90 up here. What a move in there, and the slim ribbon turns positive momentum way down over here. Beautiful, as you could see that. It depends on your perspective. Look at it here. This is one of the best patterns that we have shown you so far. It's actually moving up through the slim ribbon, but momentum still on the negative side. This one could change pretty quickly though, but still it's going to take a lot more work and a lot more time before these moves that we're having, like this one in CVX, are real and we have some sense of real momentum. How did Exxon do? I could put up a lot of these. Look at this beautiful move. It turns bullish down here. Positive momentum signal given at around 73. It rallies all the way up to 80. This is a 13-day moving average in the middle, often support right there. And you can see how that turned into nice little support there as it trades up on the upside of that. But of course, in the longer term pattern, still negative momentum, but like Chevron, turning up and giving some sign that, well, momentum may be improving in there, but it's going to take more work. And a lot of these stocks that have had these big moves are going to take more work. And so momentum for the short term, we've seen a good change. They've been trending in a positive way. However, the trends in the longer term, still pretty sick. And they're going to take some time before some bottoms formed in there. And you got to wonder if they're going to be able to do that before the next leg on the downside comes in the market. That's trending. And a segment we haven't really brought before. Go get those slim ribbons for your TOS platform.
Hi, I'm Epiphany, your askSlim spokesperson. Here's important news you can use. With the askSlim memberships, you can raise your probability of success as a trader or self-directed investor. Be better prepared for the coming week and make informed decisions when you watch our weekly show, the askSlim Market Week. Archives to the show and more are in Level 1. In our videos in Level 2, get help with trades for all styles of market participation. Better understand 6 sectors of the futures markets, learn technical tools, Manage the impact of your emotions and apply analysis of stock sectors in the big picture of the major markets, and you'll have access to our ever-growing video library. Level 3 is our trader support. Call it Coaching Light. Ask Slim for personalized help by email on the technical, strategic, and psychological aspects of trading. Or go all in with Slim's charts right on your TOS platform. Level 4 gets weekly updates with annotated charts on over 300 widely followed stocks, futures, indexes, and ETFs. Slim's unique cycle charts add the dimension of timing to help you improve your own analysis and strategic approach to the markets. Learn more and choose the membership that works best for you at www.askslim.com/membership.
Emails and tweets. Well, this has been a week of some great ones and challenging, with the market having this giant vault to the upside in just 6 days. And so good ones. I want to start out with a fun one, though, and that's from MF and RT, and actually some other people have asked me also. The question is, Slim, is that really you that's singing and playing in that intro and outro on your show? The answer is yes, that's me. And had a lot of fun with that. Actually, the audio produced at my old network, and if you saw my old music video called Go Ask Slim from that network, it just played for like 3 years. It was extraordinarily popular, and they did a great job with that. So thanks for asking, and yeah, a lot of fun doing that stuff. PC writes me and says, Slim, how do you manage losers? He says, I bought and read Al Sherban's book based on the interview that you had with him. Al Sherban, yeah, good buddy of mine, great trader, great teacher. He says it's really good, and he uses a criterion called the Kelly criterion for managing losses. And PC asks me, what's your strategy? Well, I'm different. I'm a directional trader, and I tend to be more short-term than Al, who is a strategic option trader, and probably I'm different from a lot of other traders how I handle my losses or take losses. I rarely use the word manage. You see, I avoided that just a second ago. Unless it's in reference to managing my emotions around losers. That language is a language that is normally used by strategic option traders. It's usually about managing winners. So when I hear somebody say managing, it says to me that you've been listening to people talking about trading options. To fit into that category of a strategic option trader and to trade it in that mode properly, you'd have to have 15 to 40, 50 positions on at once in options, looking to take advantage of decay usually, and make many, many trades a month and per year, really to get the numbers to work. And then still it's about trading. It's not so that much about the numbers. So I'm wondering about your style when you ask that question. Strategic option traders, normally they don't touch their losing positions. They just let them max out, and they essentially manage, or they take winners when they think it's appropriate to do so, usually on a percentage of their potential gains. I strongly believe that's a losing style, by the way. So we'll have a lot of people challenging me on that. My style is to take losses at the appropriate time. I do that based on two criteria. One is my max loss rule. It's usually about 50-60% of an option price, or if I'm trading equities or futures, it's a dollar amount relative to the size of my trading account, a specific percentage. For traders, I often tell them to keep that around 2%, 3% for trades. And the second is when my analysis goes into doubt. I'll have more questions about that. certainly as this market moves up into resistance area. And I have another question about that coming up here, similar to that. So when my analysis goes into redoubt, I reduce the position automatically. And when it clearly changes, I'm out. Just get out of the trade over, because I have no justification for being in it. So that's how I handle losing trades. And just like everybody, I have tons of losing trades. My hope is to have a decent percentage more winning trades than losing trades, and for my winners to be bigger than my losers. And I did an important segment on that for scalpers in the member section, if anybody wants to become a member and see that. PC actually responded to me after that. He says, "Thanks, Slim. I have to say that my trading is evolving. Won't it always?" He says, "I'm finding myself being a combination of strategic and directional. As I get more confident with my tech tools, I find myself being more of a directional trader, yet always being aware of my deltas." So he's an option trader converting his positions to stock deltas and managing risk. Would you agree with this approach? Well, PC, it's about the best I know of. Great approach, and that's what Al Sherbin and I did when we did our tools, our quant meet tech type segment that we did, and I think it was really great. So great question. And PC, you're still on board here, because you'd asked me some great questions. You then asked me about Micron, and I thought I would bring that one too. You said, "Yo, Slim." A quick question about Micron. On the daily chart, the price has touched and stalled on around the 89-day moving average. That's been a great resistance in the past for this stock. It's had a big move on the upside, and is your opinion that 89-day moving average will hold and be resistance? Let's take a look at that Micron chart, and we'll see. First of all, we're going to start with the weekly chart, which is what I often do. And here is MU, Micron, a semiconductor stock. So we're starting on the weekly chart, which is where I always start when I do my analysis. And I want you to notice the cyclicality that's in here. You can see these timing spikes are pointing to important trading lows. And these are the cycle brackets, which show you the rhythmic movement in the market. So in other words, there's a rally in this period and a sell-off in this period, and you could see a rally and a sell-off. Bottoms right on time, rally and sell-off, bottoms on time, rally, and a steep sell-off, and there's your bottom right there. It was a couple weeks late, but I mean, you can barely be more perfect than that in any kind of analysis. Now we're in a rising zone, and there's resistance zone right there coming up. Let's call it around 1950 on Micron. Let's switch this over now to the daily chart. We'll flip this over to daily. And here's what you're talking about. So there's the resistance zone we just showed you on the weekly, converted over to the daily chart. And here is that 89-day moving average, which you so astutely said has been resistance there and there. Beautiful. And now coming up to it right now, and you can see that little doji star right there. Let's take a little closer look, and you'll see right there on those numbers, this is a resistance area between, let's call it 1870 and that's actually 1930 on here versus 1950 on the weekly. So this is an area you'd expect it to pull back. Support zone, you could see we have that there on the charts. That is also in line with this slim ribbon that has now turned positive. So that says momentum on the upside. You're likely to get a pullback. We're going to look for a pullback, not quite to that support zone, but maybe that slim ribbon. We'll call it around 17-ish for there. And I would say that is a pretty good point to expect to see Micron pull back from. So great, you asked me great questions, PC, and you send me some good stuff, so keep them coming. LG writes me, he says, you last year, and I did recommend AG, that's First Majestic Silver. I actually had that on one of my best stocks for the year. I had believed last year that gold and silver were going to have a good year. Around the mid-year, patterns changed, And then I changed on my analysis on there and actually had said that I thought that towards the end of the year is when this gold silver correction was going to end, and that next year is going to be the big year. So I adjusted my analysis on that in the silver and gold stocks. They actually have done quite a bit better lately. Let's take a look at AG, First Majestic Silver, which happens to be coming up to a similar resistance area to the chart we just looked at before, and I'll show you that in a second. First, I want to look at the weekly chart, and here you can see this weekly chart, and this one looks like it's trying to make a bottom in here as we are near a cyclical low area. There you can see that cycle bracket beginning to turn up, and that is right in here. So might play around a little bit longer. You can see the trends are really like this right in here, and starting to get a bid in there. So this one, cheap little stock at 367, traded down to 266, so it's had a good bounce. I want to buy that next dip in there, and I would say that the stock probably is going to be in decent shape. And again, I think coming into next year, it's going to be in much better shape. So that's AG, First Majestic Silver. Next question is from a GW. And he says, Slim, I followed you into Costco, COST. So it was recently put up my opinion on Costco that it had got up into a sell area and that I was shorting it. And he says it was a good size move today. And I says, I followed you into it at about 149 on the short side. And he said, I'm sure it's due to, I'm not going to say his name, but one of our favorite TV touts on that network out there, on his morning call said, Costco, buy it on any pullback. The numbers should be good. GW says to me, he says, UNH did the same thing, United Healthcare, in the last cycle when I got bearish on it, and moved up first and then fell right down to my target when the market moved down. He wants to know, in my opinion, is Costco tied well enough to the S&P 500 for the market to pull it down, actually, and what point would be my pull the plug point on my short position? You know, a couple answers in here. Yeah, I'm short Costco, COST. And the first thing I want to say is that I never give advice to anybody on their individual positions. I'm a strong believer, first of all, that I can't do that. I can just share my analysis. And I always want the trader to take full responsibility for their own trades, and whether it be me or anybody else, not lean on anybody and control their losses properly, like we've just been talking about. So, but you framed the question to me about my trade and when I pull the plug. So, as I said a little bit earlier, you know, it's really about when it reaches my max loss, or you know, the amount of money that I'm willing to lose on a trade, or when the analysis in there changes. So let's look at the chart in Costco and see whether or not my analysis has changed yet or not. Now, Costco has an unusual chart in there in that it really gave up a huge amount of ground when the big flash crash came some 6 weeks ago on Monday. And a lot of those charts really had these crazy downward moves and big bounces up that you have to, based on cycle analysis, almost ignore them in the patterns. And you'll see that here in Costco, where the trend has basically, other than that one crazy bar on the downside right in here, which, by the way, almost made this head and shoulders measurement. That was just nuts. Where if you take that out, you can see that the trend with the cyclical pattern in here is just as it should be. So it had this big move on the upside here. It's moving up into this area that was big resistance for it right here. And there is a sell-off due right over there. A nice size correction is likely. Support is at about 144 or so, and the stock's trading at 151. And yes, I do think this is enough of a market stock that were the S&P to pull off on the downside, it will fall also. Take a look at this daily chart, and we had this resistance zone in here, and a crazy thing here on Thursday after the close, it closed right here on the top of this resistance area right over here. And where am I looking for it to pull back? Well, down to this area right over here, about 41. So I expect that we're going to get that kind of a pullback, and that is likely to be a pretty sharp, quick pullback, and then the stock probably will be in decent shape again. So that is a look at Costco, and I'm still short it and looking for that pullback, and let's see if it comes. Next question is from NHN. He says, Steve, now this is the one I have to get a little humble on this one. How can you be so accurate on your predictions? Oil shot up strongly just as you predicted this week. I'm sorry for asking stupid questions, he says, but with many known and unknown forces driving the market, how can the cycle analysis follow all these patterns that way? I followed you for over a year. Before, I've never believed in charts and in patterns. Now it always amazes me how great your analysis turns out. Well, first of all, there's no stupid questions, and that's a very, very reasonable question. And, I'm not always right. I believe I'm more right than wrong, and I think my analysis is very different, unique, and that it can yield some long streaks on the good side, and some streaks on the bad side too. I want to answer you in the best way that I know it, in a short answer for your question. There are repeating patterns of money flow in the markets. Think of it as waves in the sea. They come in and hit the shore on a regular basis. If you stand there and watch these waves, they just keep coming. Generally, there's some kind of a big wave that comes on this regular basis, and you can ask the surfers out there about those big waves and how regular they come. Each of those big waves has little waves in it, lots of little movement in the waves. And those little waves in there tell the story about the bigger wave patterns. That's what I do. I look at the smaller patterns and look at the bigger patterns. And I know just as that big wave comes into the shore, that wave is going to affect the movement of all of the other patterns. And if it doesn't, well, then that big wave doesn't have any force anymore. So that's how I use those. I try to read the markets like that. Some things are more readable than other things. You'll see me struggle sometimes as things sometimes do become irregular and not all that easy to read. Overall, I think it's as good or better than any method that any analyst uses. And I got to tell you, I really do appreciate your acknowledgement on that. So it's reading the money flow in waves. Thanks a lot for that. I get a tweet from Adamo, and also RJ, almost at the same time, sends me an email and asks me, what do you need to change your mind about your expected next market decline? Does this move on the S&P 500 over 2,000 negate your expectation of a meaningful pullback? Well, the answer to that is, let's see. I'll be right back with my short-term view. All right, this is our short-term view of the coming week. We're going to look at 5 different markets here, take an accounting of how we did in the last week. Was not a great week for us. We're going to call it a 50% week, so it just made us kind of average. I hate that. We waited to the last hour this week because we've had the last 2 Fridays have very big moves in the last hour, so I kind of waited before we got into this discussion and it's a much quieter Friday, though anything can happen, of course, in this last hour. We're not going to wait till the close because, well, production time takes pretty long after we get this recorded. So we're going to go right into it here. This has been a week that saw the stock market a lot stronger than we expected. That one we completely got the call wrong on there. We did well in oil and in gold, and we did okay. We'll give ourselves like half credit in the euro market and the bond market, and we'll show you those things as we look at the charts and get ready for this next coming week. We're going to start out in light crude, which we did well. We were expecting a big move in light crude, and it sure did come. Here's that daily chart. We're going to be only on daily charts in this segment, and of course if you want to get our weekly charts and all of our charts, please become a subscriber to Slim Charts, and you'll be able to have those all on your TOS platform. So here is what we had. We had a pennant here that was forming. We saw this declining cycle going nowhere on the downside. It suggested we were going to have another rally on the upside as this rising cycle phase took a hold. That's exactly what happened. We thought it would get up. A first target was around $48. Now this is where we close the week right over here. So we said first target was 48, right around here, and then after that we thought it would go to 50 to 52. There's that 52 number there, and that was 50 right there in this big resistance zone. It gets up there on the 5th day of this small cycle, so that means that we're set up for, we're going to call it a down up week. In other words, down early, and I've got this little V drawn on my notes right over here, and then back up. Usually when you get a short cycle like this 6, maybe you get a little bit longer one. We're going to look for 8 or 9. So we're going to say that it's 3 or 4 days on the downside in here, testing support between 48.10 and 47.40, and then moving back to the upside. Right there. So that's the shape, and that's our targets for the week. You can see that little doji in there in the rejection, so that is saying that that's a tough area for it right there. As we mentioned earlier in the show, Goldman Sachs said it's going nowhere, and maybe so that brought some sellers into the market, but it did have a big move, and that little doji says time is running out there. Next thing we're going to look at is the gold market. We'll do the first two that we always do. These are the ones we did well on. Our expectation was that we would see a small up week, that it would get up to 1155 to 1170, and that sets up a weaker November. That's what we were looking at. Let's take a look here at these patterns in here, and this is really what we expected. We thought it would get up past this resistance area right there, so that was 1155. It got up to about 1159, so that was perfect, and we thought it would be a small up week, and well, it's kind of a medium up week. It's up about $16, $15, so it was a nice up week. And this unusual, see that evening star that formed, that it was followed by an up day right there. So that means that was a failed pattern there. Occasionally happens, of course. And so now what is the pattern? Well, I'm going to call it rolling over now. We still have a shot at getting up to this resistance, 1170. So, that would be early in the week. And then these patterns take over. That's this right over here. And then I think that they're going to move down. I'm going to look for a failure this week. We'll call it a down, slightly down week as it rolls over, and could actually test this area down here, 1138 to 1132. Now, I don't know if that's going to happen in this week or it's going to happen in the following week, because this to this next low is about, we'll call it 8 days. So it's kind of hard when you overlap a week like that, but I think the direction will be down, and we're going to get a failure in here and see gold have that dip down to that support. If I were to project it out even further, normally I don't do that in here, it would be like this decline right over here. Now you see this rally? It would rally at some point in here, and then it sets up for a bigger decline out into November, early December. So I think that all of this is just setting up for what will be a final move to the downside to set up a good year next year. So that's a little bigger picture, and right now we're going to look for it rolling over this week. The next thing we'll look at here is the euro /6E. Now, what we expected this week in the euro was that it would kind of have an up-down week, get up into the 1350 to 1380 area, and then get ready to turn lower for a move down into the 111s. So it's 113.50 to 80 was our upside target. So it got up to right near 114. And we expected it to go up and then roll over. And you could see that's still our projection in here, but it held up most of the week, or all week. So we don't get full credit in here because it didn't roll over yet. We expect this to be a down week, and the dollar pattern sets up for an up week. So we're going to expect that inverse correlation to hold up. We're going to look for a test in here of the 112. 60 to 112.30 number here in this next week or week and a half, right like that, then probably set up another minor rally, and then after that some bigger declines in here for the euro. So that's kind of what's setting up in a little longer term picture. This week I believe it's a sale in this area. If it pops up a little bit more up in this area of 114.20 to about 114.80, that of course is possible in this upward momentum, but then it'll I believe roll over in that period right here. We're going to call it in here a down week in the euro. Next thing we're going to look at is the bond market. We'll look at the 10-year notes, which is what we key off of. And our expectation in the 10-year notes was that it was going to be a down early drop and then up with a small change or a small down on the week. So we have the small down on the week, which was really our expectation. But what we expected was an upturn, and that upturn, let me just move this out so that these things line up a little better here, and that upturn right here is what we were looking for to get us this rally in here. So what I'm trying to do is, learn from the correlations in here between the stocks and the bond market. This went down a little bit longer, so we're only half right because, well, we got our week that we expected in here, a small down week, but the pop that we expected right in here didn't come yet. And that's, of course, because the stock market was stronger throughout the week than expected. So you see it got, right down to the support area. But now what we're looking for is an up week in here into resistance. And this to me looks like a sell area right in that area. That's between 129.03, 129.09. That's the target. We're going to look for that kind of a rally. And that sets up, of course, a pullback in the stock market. And then I think this pulls down again, and that sets up another rally in the stock market. So that's, you could see in here, we're going to look for up the correction in the stock market, rally in the bond market, down, another move up in the stock market, and another move down in the bond market. That's how it sets up, and we want to be a seller in that resistance zone right over there. So that's how the bond market sets up. So what we said was that, this bond market looks like it's going to get a bit of a rally in here, and it's a sale. That probably means that the stock market is going to get a bit of a pullback in here. So, let's take a look at this stock market. It rallied well beyond where we expected. I really want to encourage you to go watch my big picture in the stock market, which talks about these big upward spikes after periods where the stock market declines, and how you know whether it exists in the ongoing bull market and it's a resumption, or whether or not it's going to fail and that the selling actually takes over again. I'm not going to tell you that right now. You got to go watch that segment. And so to me, for the shorter term, based on the way this sets up and this big move that we had, I tell you right now, it looks like it's not likely that we're going to see the end of that rally right now. We'll see a pullback, but then likely the market will start moving up again. and that is the opposite of what I just showed you in the bonds. So let's take a look here at the stock market, looking at the S&P 500, and looking at if it were to set up opposite to what we're looking at in the bonds, how it looks for the stock market. So here is the S&P 500. Now there are these repeating patterns in here, and you can see the cycles on the bottom. There are two of them on the bottom because I had a 13 to 16 week cycle, so I'm not sure about how this sets up. I have been talking about a corrective low in this period right over here between 10.13 and 10.16. So we're going to keep that in the picture here for the moment. First, I want to talk about as it got what I expected last week and what happened. First of all, you could see 2 weeks ago this beautiful morning star that formed where it made this big W bottom right in here. So what my expectation was that it was going to roll over one more time and take out this low with some capitulation, and then have a V bottom off of that. And I talked about some period of rebound in the stock market. Well, sadly, it came early, gave you the W bottom instead, and what I thought was going to happen out here actually happened early. So that's how the analysis went wrong, and sometimes it's really hard to do this short-term timing because the market never wants to do what people expect it to do. So we've had this giant bounce in the stock market. It moved up through these resistance zones that we talked about right in here easily. Really barely a hesitation in that zone. We're going to be pulling that resistance zone off there. This is a much bigger resistance zone right in here and much more important. There's another number somewhere right over here that I don't have in there that's in the 2075 area, which is another resistance number. I don't think it's going to get there. Now, I do think that this 89-day moving average that you see here at 2037 and this resistance zone over here at 2031, that's really ultimately where we're expecting the rally to get up to and fail from. Now, what does the short term look like? It looks like this. This is an 8-day high. Now, you see that? That's an 8-day high. And you have this doji right over there going on, and this, of course, was a kind of a doji shooting star right there. Now, what happens after that is you get a correction, and we're looking for that. You can see that right in here. The correction, though, I don't think is going to be anything like this because we have this very, very different nature of the stock market and a lot of stocks that have put in important weekly bottoms. We told our chart subscribers about that in the email we sent them with their recent chart link, that there's a lot of stocks that formed bottoms. So this is an important time. And we think that we're going to get the correction. It's likely to get us down right over here. This is 1963 in what we believe is going to be, 4 to 7 day period right in here of a decline. It still could chop around a little bit more in here. But then when that's over with, it's likely we're going to move up again into this resistance area that we're talking about. So this is likely to be a fast break and then a big up right over there that you can see. And I'm going to guess that it's going to be more like about 4 or 5 days before this thing is ready to move up. We're going to call it a down week for the stock market, but again, it might be that it takes one big down day to get it to happen, and most of the days the market is probably going to be acting like it doesn't want to give up a lot of ground on the downside. So you can see that it's really had this monstrous rally, 128 points in the S&P 500, and the decline in here is likely to be one that happens quickly. The VIX, VIX, is supportive of that. And here's why it's supportive of that when I look at this pattern. Now, here's the repeating cyclical pattern in here. And what this says to me when I look at this is that this is about a week and a half or 2 weeks out here before ultimately the VIX low is due. So that says to me, I'm looking in the stock market for like a 4 or 5 day decline. This would be the 4 or 5 day rally right in here, and this would be the 4 or 5 day rally in the VIX. while the decline in the stock market goes on. And this would be the next decline, the next rally in the stock market when the VIX comes down and finally makes its low. So that's how this pattern is shaping up, and it's confirming to me what I'm believing in the stock market, that there is likely to be this correction in the coming week, but that it's likely to be fast, and it might be deep, and then again bounce off of those support areas pretty quickly. So I still think that, here we are 2 weeks off of that bottom, and based on history on these upward moves, 2 weeks is a very, very short period of time. Now, if it follows the pattern that I'm suggesting, it would be a week down and maybe another couple of weeks up. Then you're 5 weeks out. Then you're getting to where you could be rolling over and having more trouble in the stock market for another wave to the downside. I don't want to give too much of that away because I want you to go watch my stock market big picture analysis. That is it for this show, the askSlim Market Week. I hope you have loved it. I hope you found the information valuable. And if you've got comments, criticisms, whatever it may be, send them on. I could take it. So that's it for the week. And I want to wish you a great week. And I'm always wishing you great trading.
Well, I'm going to sit